Equity markets turned negative on Thursday, while gold surged to a record high as concerns grew that President Donald Trump's tariffs and immigration policies could drive inflation higher. Despite Wall Street closing at a record high for the second consecutive session, markets pulled back following a recent rally. Investors had previously shrugged off Trump's latest tariff measures, viewing them as strategic moves in trade negotiations. However, minutes from the Federal Reserve's January meeting indicated that officials were unlikely to cut interest rates in the near future, following three consecutive reductions. Policymakers expressed concerns about the potential inflationary impact of Trump's policies, noting that while inflation was expected to move toward the Fed's 2% target under appropriate monetary policy, progress could remain uneven. Without directly mentioning Trump, the minutes indicated that policymakers were concerned about how potential changes in trade and immigration policy could complicate efforts to manage inflation. These concerns follow warnings from economists who argue that increasing tariffs on trade partners, while simultaneously cutting taxes, regulations, and immigration, could contribute to rising inflation. According to CME Group data, traders currently estimate an 80% probability that the Federal Reserve will implement no more than 2 quarter-point rate cuts this year. The minutes also highlighted officials' awareness of the urgent need to raise the debt ceiling to prevent a potential default, which could significantly impact the global economy. While the government reached its borrowing limit in January, the Treasury has managed to sustain operations through so-called extraordinary measures. The overall tone of the meeting minutes was expected, given that Fed Chair Jerome Powell had emphasized, no fewer than 5 times during the January press conference, that the committee was in no rush to make further adjustments to policy rates, said Ryan Wang, a U.S. economist at HSBC. While all three major indexes in New York advanced, with the S&P 500 reaching another record high, Asian markets struggled. Hong Kong, which has gained approximately 15% this year, fell by over 1% as the recent surge in Chinese tech stocks came to an end. Tokyo faced pressure from a strengthening yen, which briefly dipped below 150 per dollar as the Bank of Japan signaled further interest rate hikes. Markets in Sydney, Seoul, Wellington, Taipei, Mumbai, Bangkok, Singapore, and Manila also saw declines. Shanghai managed to recover from early losses and ended the session flat after Trump suggested on Wednesday that a trade deal with China was possible. He also told reporters aboard Air Force One that he was considering imposing lumber tariffs of maybe 25% in the coming months. In Europe, London opened lower, while Paris and Frankfurt edged higher. Meanwhile, gold surged to a record high above $2,954 as investors sought the safe haven asset amid global uncertainty and continued central bank acquisitions. Traders remain cautious about developments in Europe, particularly after Brussels and Kyiv were left out of the first high-level talks between the United States and Russia since the war in Ukraine began. Trump sparked controversy by referring to Ukrainian President Volodymyr Zelensky as a dictator on Wednesday, further straining relations in a conflict with significant geopolitical stakes. The United States has played a crucial role in funding and arming Ukraine, but Trump made a dramatic policy shift by initiating direct talks with Moscow just weeks after returning to the White House. A dictator without elections? Zelensky better move fast or he is not going to have a country left, Trump posted on his Truth Social platform. Zelensky, who was elected in 2019 for a 5-year term, has remained in power under martial law as Ukraine continues its fight for survival against Russian aggression.